Hi traders, welcome to the live Admiral Markets webinar. So sorry for the delay, as I just mentioned before. We were supposed to start at 2 p.m. GMT time rather than the usual 3 p.m. So I missed it and forgot about that. Thank you for sticking around. But luckily we will be uploading this to YouTube, and you can see it there for those that were perhaps waiting for me live and then left. Sorry for that, and you'll be able to see it through this webinar, through the recording, luckily enough. Before we take a look at the live charts and begin this live webinar, these two disclaimers. First of all, the fact that the webinar is shown to a global audience but may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity to find out if it is suitable for you. Second of all, please note that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. All right, so for more info about Admiral Markets, of course, check out admiralmarkets.com, and you can basically take a look at the education, analytics, platforms, products, start trading. All of it is here. So there you go. There's some webinars you can sign up for the future. Also, for instance, Nenet's webinars, trading wave and chart patterns. Also, some new webinars here, real-time daily trading ideas as well. So a number of things you can check out right there. Regard to admiralmarkets.com. With regard to the markets, let's go right now and check that out. There we go. So we have euro dollar. All right, and the euro dollar broke out of this falling wedge, which is a bullish reversal pattern, chart pattern, and broke above the weekly pivot point. So this 4-hour candle was a good breakout candle with a clear close above the weekly pivot point and a clear close above the resistance of that chart pattern. So anyone taking along there is doing okay. You can see that the price is up 50, 60 pips and pushing up higher and higher. So that's a good breakout trade. Even those that took this candle this morning at around 117.60 are doing okay and could put the stop loss to break even. So is there a continuation possible? I think so. On lower time frames, there could be a breakout between 118, 118.50, and even an extension up to 119. So yes, I think it's possible, excuse me, to see a further upside. Just want to get rid of this fib for the moment, so we don't overcrowd the charts. There we go. So a break above R1, I think, could have this space right in here, and see an extension towards 119 as well, which is the resistance trend line of this particular daily chart, right? So if we connect these tops up in here, we get this resistance trend line. So this particular move like that, and then we have a new potential bouncing spot, because that's a strong resistance. It's R2. There's some bottoms in here. That could be a bounce or a breakout spot or a reversal spot. All right, so that depends. If it's a mild bounce, we could still see the breakout for a test of 120 and 121. All right, so if we get a breakout, price might be back in uptrend, but it could also still just be a sideways move and then hit 120 and move down to 117 and basically complete kind of a correction like this. All right, so that could happen too. So just because price breaks above that olive green trend line doesn't mean it is necessarily full blast uptrend. It does mean a bullish breakout potential to 120, to 121, which is a new decision zone. And if price breaks above that, then I expect 122.50. If it bounces, it could just be, as I said here, a three-wave correction like this. So very important, this 118, this 119, this 120, 120.50 area for whether, deciding whether this is full blast uptrend again or just a bigger correction. If it is a bigger correction, it will make an ABC correction like this, then make a new ABC down and complete, as I already indicated, a three-wave pattern like this. All right, so that's something to keep in mind. Now, more, let's say, up to date about what's happening right now is this particular break. So we had the break already, right? The breakout here is something I mentioned on Monday's video, the potential bounce here too, but that didn't happen. So the breakout has happened, but what is left? A continuation is still possible. So what I would like to see is probably on a 50-minute chart, and I don't think it's going to happen today because it is getting close to London end. But what I would be looking for basically is some kind of, in a way, some kind of 5-minute bull flag like this, push up to 118.30, some flag down to 118.20, 118.10, and then a break like this up to 118.75. Something like that. That's basically an intraday setup from my point of view. Tomorrow, probably. I wouldn't be surprised. I'm not sure what price will do right now. I wouldn't be surprised if it kind of makes a flag right here. Then tomorrow, there could be a breakout too, by the way, if it makes a flag. So basically, what I'm waiting for is either tomorrow London, a flag and break, or if it breaks now or soon, a break, flag, and a breakout later still today in New York session. All right. Why is it intraday? Because of the fact that the space here is not that big, right? And it has moved already a substantial part. So it has basically, finished half of its move already. So that means there's only kind of like an intraday perspective remaining. For those swing traders out there, the swing trade was from here, or maybe even from here, but not at the R1 anymore. That's a bit too late for a swing trade. So that's sometimes these perspectives, the time frames that are tradable do change as price moves and as the chart develops. So this was a good breakout. This was a good swing trade. From a long-term trade perspective, right? This pin bar wasn't too bad, right? Pin bar, put the stop loss below, and aim for the R2, or aim for the R3, or aim for the top. That could have been a long-term trade idea. But that too is behind us. However, if this is a good bullish candle, it could be even worth trading by putting on a fib on that, waiting for a 38.2 fib like that, putting stop loss below it, and just waiting for a move up to the R2 or R3, or even the top, right? So that could be a long-term trade idea. So those are basically my thoughts on the euro dollar at this moment. Now let's take a look at the pound dollar. If you have any questions, just feel free to reach out to the chat. Now regarding the pound, basically still expecting this to be a correction. However, the correction is way deeper than I expected. I thought 119.25, 119.75. It stopped around 119.75, made a correction, but ultimately this started to become more of a channel, and the bullish momentum was stronger than the bearish move down. So this was this bearishness was more of a correction. That's why this morning I was looking for a continuation up to 132 and 132.50. All right, so this is the main fib, and you can see that price is battling against the 38.2 fib. This is a pound dollar and a 4-hour chart at the moment. And so if it breaks through this 38, the next resistance is the 50. This is a supply and demand zone. You have momentum, sideways momentum, and you have a 50 fib. So basically, this could be a bouncing spot too. So looking for a bounce at the 38 or 50, I think 50 probably still a little bit more likely. This morning, I thought it was definitely more likely, but we didn't really see the break of the 38.2 fib yet. If it breaks this little bull flag, there could be a small break to the 50 fib, but then the 50 fib, I think, probably still going to be a turning spot. So whoa, sorry, what happened there? There we go. All right. So what I'm looking for, a couple of things. I'm looking for 4-hour engulfing twins at the 50 fib at around 132.40, 132.50. All right. Now, there are a lot of resistance points there. The trend line might be broken, even if we draw it a bit like this. All right, the resistance trend line is broken, but if it breaks by a little bit, like this, and then starts to move down, I don't think that's a big deal. However, if it would break above the 50 fib, then I would start to be more cautious of downside, and this specifically if it breaks above the 61.8 fib and the R1, then this is definitely not bearish anymore. So that's really my line in the sand. The 61.8 fib, break above that, my bearish analysis is definitely out of the window, and I would reanalyze it. Then it's probably, in that case, it's probably made an ABC correction rather than a 1, 2, 3 bearish movement, and basically that would change, the structure, of course. In that case, I would probably be analyzing this a bit better, and in that case, it would maybe be a wave 1, 2, 3, 4, 5. We'll have to reanalyze that, but definitely looking more bullish. And this is probably an ABC rather than a 1, 2, 3. If it stays below the 50 fib, I'm leaning towards a wave 4. And then, if it turns at the 50 fib, there's a good chance it will make a lower low at 130 or 129. So that's basically the importance of this particular zone, or these fibs. The 38 and 50 is bearish territory. Between the 50 and the 61.8 fib, I would call neutral territory. And above the R1 and the 61.8, I would consider bullish territory. All right. So what I'm looking for basically is bullish engulfing twins at the 50 fib. Bearish engulfing twins at the 50 fib. Other way around, of course. Excuse me. All right, that's one thing. The second thing would be a break of this channel. So a turn here is one. The second would be a break of this channel with a good this is 4-hour candlestick pattern at the 50 fib is fine, or a 4-hour candlestick pattern breaking through the support trend line should be good too. Engulfing twin like this is fine for a further downside towards the 129, 130 area. 130 is a round level, so if you want to be cautious, aim for 130. If you're more aggressive, you can aim for 129. The other idea is that if it doesn't reach the 50 fib, right, it could show engulfing twins at the 38 and break through this channel. That too, I think, is valid because then it's stopping at the 38. So a break of this channel is good, either case. But from a bounce point of view, I'll be looking for engulfing twins at the 50. All right, this particular wick and doji shows indecision, but considering the pattern that I'm seeing on the hourly chart, which is at the moment a bull flag, I wouldn't want to trade that wick yet. What I rather would wait for is for the bull flag to break to the upside and wait for price to hit the 50 fib. Or let the bull flag fail, make engulfing twins here on the hourly or 4-hour chart and take the breakout to the downside. So I don't want to short in this bull flag. I want to short it when it breaks the bull flag to the downside or if it hits the 50 and turns. For those more adventurous traders, yes, this bull flag, a break of that bull flag, could be an intraday trade to the upside. But it's a very small space. You're talking about 50 pips. And this is a bit more risky. But yeah, it's definitely trades that traders sometimes take, right? Even though I think this resistance is strong at the fibs, it doesn't mean that there wouldn't be some potential space between them. And that is possible to trade as well. So another idea, but I like the downside a little bit more at this moment just because of the fact of the resistance that is nearby. Alrighty, so let's see, anything else regarding this pound dollar? Also, could be good to take a look at today's candle. I mean, if today's candle does end up bullish, very bullish, right? That would also make me a bit more cautious about the downside, because if it ends up with a close near the 50 fib, and it closes right at the high, and the high is at the 50 fib or close to it, well, a bullish candle like that, let me get rid of these trend lines today, right? If it does something like this, well, that would kind of invalidate my analysis too, because in that case, if you have a strong bullish candle such a strong bullish candle, it will typically break through the 50 fib and tomorrow or the day after and head towards the 61.8. And then we're already in neutral territory, as I said. And in that case, the downside is there's no favorite in that anymore. So if today's candle is really too strong and the close is that clearly close to the high, and the daily candle closes near the 50 fib, then I'm already neutral. It kind of the bearishness is dissolved in a way, removed. So let's see how this daily candle closes too. All right, dollar yen. I'm getting my pairs mixed up. Apologies for that. So dollar yen basically broke finally to the downside. It was making a correction, obviously. Depending on how you draw it, it was making maybe a rising wedge, maybe a bear flag. But in any case, it was a pattern. There was momentum before that. And I was looking at indeed an ABC zigzag. So the break here or here could have been something to think about for potential trades. Now, however, there was a bigger support levels right around here. So that would have been maybe not a great trade or a difficult trade to take. The thing is that the candle close was quite near the low, so it was a decent breakout candle. And when that happens, specifically looking at the 4-hour chart, when that happens, price does typically break out. So it was probably an okay trade, but considering the support zone, I can see why some hesitated, why some would hesitate. But this is a pretty good price action signal of the break of this corrective pattern right in here. So what's next? I think probably with this break, it could be good to take a look at the daily chart right here. This is finally turning, and it has taken a while. But ultimately, I think this could fall down to this fib from here to here. All right, so I think the next probably step would be to take a look at this daily candle. If the daily candle closes near the low, I would expect a break of the 23.6 fib and price to fall down to the 38. So what we can see tomorrow is a bit of a pullback, maybe halfway, not breaking today's high if it closes near the low, and seeing a continuation fall somewhere this week or maybe even beginning next week towards the 38.2 fib. But I think today's daily candle would be the best thing to look for at the moment, because the breakout trades that we could have had have already occurred. So when looking at lower time frames like the hourly chart, like the 4-hour chart, even the 50-minute chart, the trade was really this break of this corrective pattern. That was the trade, and the confirmation was the breakout candle. Now it's a bit late. I think we need to zoom back out and wait for the daily confirmation. It could be possible to trade on an even lower time frame, maybe on a 50-minute chart. If, for instance, like this, we have another bear flag, right? And we're going to break up that bear flag, and there could be some continuation lower. But I don't think it's going to go all too far today. I think that probably price will stop and hang around at the 23.6 fib. Not really do much. That's my best estimate, because the 23.6 fib typically does provide some support. This is all estimates. Of course, price could go break through the 23.6 fib before today's candle closes. In that case, tomorrow is even more bearish than expected, right? And it could close somewhere here at the S2, and then we'll see a bounce back to the S1 maybe tomorrow, and then down to the S3. All right, but it could also easily just close where it is right now, and nothing happens today. So what could happen is that for the next, 8 hours or so, price just goes like this. At the 23.6 fib, sets up a good kind of flag. On the daily chart, we see a small retracement of the daily candle, and somewhere tomorrow or Wednesday, we see a breakout continuation down to 111 and the 38.2 fib. Because typically the 23.6 fib will do that, or there's a good chance that that will happen. So is it worth trading, those couple of pips on a 50-minute chart, even though there could be a small little bear flag on a 50-minute chart, and that one next push for 15, 20 pips, maybe. But you can see why I'm a bit skeptical about it, because the space is so limited. All right, if it would break below the 23.6 fib today, right, then I still think it's probably better to trade tomorrow after it makes a retracement. So I would, rather, from my perspective, it's best just to monitor on the daily chart. That's pretty simple. From lower time frames, I don't see much at the moment. All right. Very risky traders might even consider some bounce at the 23.6 fib, but I really don't think that is a particular good idea, because I think that the chance of today's daily candle ending bearish is very high. So, and in that case, it should continue lower. And ZT took some pips, 10 pips on the dollar yen. Great job. And I can see there was a very little space indeed. So, that makes it tough to trade. From a reward to risk perspective, I don't know if you were aiming for 10 pips or if you took 10 pips. If you took 10 pips, that's great, because then you were aiming for more and you managed to get 10, which is perfect. If you're aiming for 10, then it could be a bit on the lower side, from your R2R perspective. But that's something just to keep in mind. But other things you can keep in mind, by the way, are how the breakout candles are looking. If the candle closes are near the low or high, then typically, and price has already tested the levels multiple times, by the way. So here we had multiple tests of this level. Of course, the level becomes more established in a way, but if we have, eventually it is going to break. And if you have, in that case, good candlestick closes, then typically it will break, as I already mentioned. So let's go on and take a look. Aussie, Kiwi, the Aussie and the New Zealand sides have been quite weak recently and have been pushing lower. Now they are moving up. That's because the dollar is weakening. So, the Kiwi and Aussie are kind of following that sentiment, but they're not really doing it too enthusiastically. And that's why we can see some crosses, of course, move up as well, like the Euro New Zealand. That's the one I traded myself yesterday. And that's because I thought that New Zealand looked relatively the weakest and Euro looked relatively the strongest. So the Euro New Zealand seemed to me like one of the better matches in a way. But with regard to this, we'll take a look at that in a second. With regard to this Aussie and Kiwi, ultimately they are moving up, but I think that their structure looks bearish, all right? Because if you look at the Kiwi, you can see it's kind of a sideways flat. It just hasn't had really the the power to move further lower, and that's because the dollar isn't really that strong against the euro and pound. So I think that if the pound were to break the channel to the downside, we should see the Kiwi and Aussie follow suit. I think the same is when the euro dollar might make a little bit of a pause. It is breaking actually right now, the R1. So if the euro dollar hits the 119 level and starts to make some bull flag, that's when the dollar might strengthen against, for instance, the pound, the Kiwi, and the Aussie, and we might see turnarounds on those. So yes, at the moment moving up, but no, not too interested in that. Rather wait for these kind of flags to finish for the moment. And that doesn't have to necessarily happen, but it's the most interesting, I think, at this moment. And if this is a wave 4, all right, then I wouldn't expect price to get higher than the 61.8 fib. I mean, the 50 fib is ideal, but price stopped there already. So max I would give it is the 61.8 fib. If it goes above it, then it also doesn't look as bearish as it once did. The Kiwi, I would say, probably to the pivot point. That would be the max for this bullish retracement. Regarding that Euro New Zealand, now why did I like that the most? Because we talked about this one in the past too, the fact that price was at, hang on. Sorry, I wanted to just quickly add a fib. It's giving me some delay somehow. Okay, right. I have too many indicators on this platform. So I wanted to put the fib from here to here. It's just taking a little bit of time. Hang on. All right, there we go. You should see it soon. And it hit the minus 272 target. So basically, what happened was that price made a retracement at that minus 272 target and has been retracing to the previous broken top. And that provided a bouncing spot. And I was talking about the continuation towards the minus 61.8 target. So I'm not sure if you see that fib finally. There seems to be a bit of delay in what you're seeing. Do you see this 50 fib? So sorry, do you see the fib at the moment? Do you see that price hit the minus 272 target? I think you finally saw it. See it now. That took quite a while. There is a bit of delay there, I think, between what I say and what is shown. So sorry for that. That's just the webinar, I guess, speed. But you should be able to see the minus 272 target now, where I have a blue circle. And there, basically, price made a bounce. And I was saying that if it breaks through this bull flag, there should be a good break to the minus 61.8 target. So what happened was, on the daily chart, we had the break indeed. Now, depending on how you draw it, this could have been the break, this candle, or one of these candle closes, or even the breakout like this. So that was definitely bullish territory at that point. So this week we gapped up even. So if you didn't manage to grab any longs here, it gapped up and made a bull flag. So what I was looking for was the bull flag basically here to finish. This was a clear kind of corrective pattern in my view. Plus, I did some analysis with regard to the currencies, and Euro New Zealand looked like one of the best to me because of the Euro strength and New Zealand weakness. So I like this one. I took a setup on this particular candle right here, based on my SWOT system. That's when my SWOT system provided this signal. I took it there, and price is still up, going up. All right, so I'll be trail stopping it for the moment, but I will place a TP soon and add a TP soon. I think that I will add the minus 61.8 target to it. And I also, of course, keep using that trail stop loss because it is moving higher, but it's not that much momentum. So it's okay. It's a good speed. I think I'll use this 4-hour candle and just go below it to lock in some profit. And I will think about a TP as well. Yes, it was a good one. It can move fast across like this, and it's about 100, which is not bad. Although crosses really move fast, so they quickly become 100. So it's okay. From this perspective, it's good. And I just wanted to indicate that it's not that fantastic either. I mean, in the sense that it's not so strange for these particular crosses to move fast, like Euro New Zealand, Euro odd, pound yen, Euro yen. They typically move a lot. So if you catch the trend, you can get a substantial push. So, all right. The Euro odd was also moving up and has been moving up. I like the Euro New Zealand a bit better because the odd New Zealand looked bullish. So that's why I prefer the Euro New Zealand. here too, I preferred more the euro New Zealand than the pound odd or pound New Zealand because of the euro pound, which looked like in a bouncing spot to me and in a bullish channel. All right, so that was my consideration. Although all those four kind of had the similar kind of structure in a way, and I still think that euro pound is an interesting one. By the way, it is in this channel to the upside, but it is struggling at this moment. All right, so you can see still in this channel to the upside, but price is kind of like making a bear flag and had some momentum here. So it looks like a question mark at this moment. I think if it breaks this channel, it could be bearish from the pivot point down to the S1 at least, or if it stays above this weekly pivot point and manages to maybe break above the current bear flag like this. All right, if it bounces and breaks, there could be some upside again. But I would probably need a breakout before trading it. Why? Because this is too much momentum and this is too choppy. So I would need a bullish breakout or bearish breakout, I think, to get some clarification on the euro versus the pound side. With regard to future trades regarding euro odd, pound New Zealand, euro odd, well, the pound odd looks like it's also pushing at this moment. The pound odd was a good break, counter trend break here. It was a triangle. So anyone who took that trade did very well. I didn't, but I know some traders who did, and that was excellent trading. It was counter trend trading, but it depends how you look at it. On the 4-hour chart, it was with the trend trading. Because the moving average is still up, but still, this was a strong momentum down. So that took definitely some guts to take that trade. Great job on that, really. And that was a good breakout to the upside. But still, good trading there. Now it seems to be making some kind of flag like this, and it could be ready for one more push up, in fact. All right, and it's not too far from the breakout candle, which is around here. So that could still be maybe worth a pending order there. Stop loss maybe below this low or this low, and it could still see continuation of this Aussie weakness. The question is pound New Zealand is a bit better maybe? And that will also depend on the AUD New Zealand, which is bullish at the moment indeed. Well, I think pound New Zealand, I'm looking at what could be the best. And I think probably it's better just to wait for a bull flag on a 1-hour chart or wait for this daily candle to close. If it's near the high like this, as it is now, then although it's a relatively small candle, it still looks like a good bullish candle that will break through this resistance. So that's probably the best. I know that might sound boring, but I think it's probably the best is just to look at this daily candle. So, in that case, if it is strong, maybe a small little retracement of the halfway that candle or the 38 of that candle, 38.2 fib, and I think there's a good chance of a continuation higher. So pound New Zealand, euro New Zealand look like the best at this moment due to the AUD New Zealand that is showing some strength to the upside at this moment. All right. Euro yen and pound yen, I think, are remaining. And at this moment, they're a bit choppy. We had a break to the downside, but we had a close in reverse. Look at that. Boom, boom. On pound yen, this is 15-minute chart. Let's take a look at the hourly. 4-hour and daily chart quickly. All right, so I think I had a fib from here to here, if I remember correctly. So we had a 50 fib bounce. Alrighty, 50 fib bounce, yes. This ultimately, I think, is more looking like a bull flag. So I think that we have to see, of course, it is, the pound. If my weakness on the pound were to be true, then it should drag this pound yen a bit lower as well, unless the dollar yen also, of course, provides some counter to that. So, but ultimately, from this point of view, the structure does look bullish to me. 50 fib bounce, upside flag. So that looks more bullish, even though, of course, resistance is not too far away at 149. What could happen, though, is that price maybe makes a little bit of a dip like this, retest support, and then makes an upside. So that could kind of fit with the pound dollar as well, first making a downside. So all in all, I'm not sure if I'm interested in trading pound yen at this moment. I would probably rather wait for pound dollar to make more to confirm its intentions in a way, to confirm what direction it's more likely to go to. Yes, indeed. Yeah, I agree. Flavius also says could make a fake breakdown and then move up. That, yes, could be very possible. I think so too, indeed. And the downside could be fueled by the pound dollar, perhaps, that I still am expecting at least, and the upside by the subsequent pound strength if it makes a lower low. And of course, the dollar yen could also be very choppy. It could move up like this, move down, and 38 could be a bouncing spot, and this code might go some sideways. So I would probably not take this breakout. I am not that big fan of that at this moment. Euro yen, I'm leaning towards an upside break, in fact, at this point. But it has to happen first of all. We have a lot of resistance points, but here too, yet again, one of those lines that has been tested often. But yes, it will break eventually. So if we see some good candle, I think closing above this particular trend line, it could be a good breakout there. So we haven't had that. We have wicks above it. If we have a good candle close above it, I think that could be a good breakout on the Euro yen 4-hour chart, and that could be considered with the trend because price is above the long-term moving average, and that could be a with the trend breakout, in fact. So those are some things I'm keeping in mind or keeping an eye on. With regard to do you have anything else in mind? I mean, we covered more or less the majors, some major crosses. There's some exotics maybe that we haven't looked at, of course. So let me know if you have something particular in mind. Oh yeah, the dollar can, of course. Yeah. There we go. All right. Dollar CAD is a bit neutral in my perspective. We could say that dollar is a bit of a mixture at this point. I mean, we had big strength against the pound. Now we're seeing some weakness against the yen. CAD itself, I think, is probably in a similar situation as the dollar, and I think that it's kind of reflected in what we've seen in price movements. We've seen up, down, up. So they're kind of no one is really in control, I think, at the moment. Depending on the flow, we had one push, but then quickly turned to the other side. So from this perspective, though, the trend is still down ultimately, but we have bullish weekly candles. We did have a pretty big wick at the top of last week, but that's not a real big reversal signal either. And pretty good upside channel. So I think we can keep an eye on last week's low. All right. We did have a big wick, by the way, last month, but that could be retraced this month. All right, daily chart. There we go. So break of this channel. Let me draw that up for you like this. Could be occurring soon, depending on how today closes. Depending on how we draw the trend line, it doesn't really matter. It would break through that. So I think from this perspective, depends on how today's candle closes. All right, now we do have to keep in mind as well the horizontal support, which is here, the S1, the Keltner. So I think that how it closes is probably going to be important too. It is looking like an ABC correction at this moment. So keeping an eye on today's candle would be pretty good info, I think. If it closes near the low, near 124.50, with a bearish candle like this, that's a clear breakout signal in my view. If it's something like this, or it has a little bit of a wick here, that's indecision, I would say. So it depends on today's candle close. This candle is not that big yet, and if it has a little bit of a wick, then I don't think it's that great of a close. If it's this particular candle size and has a candle close near the low, then probably ready for more downside. I would probably look at an hourly chart, look for some bear flag, and look for a break down to S1 because that's still the weekly low. All right, so if it closes somewhere like this, bear flag, break. If it today still moves down and closes very low, then I think it would even be a bigger break to the downside. If, however, for whatever reason, the price starts to do like this, all right, in that case, it's not bearish and it's respecting the support. Forget these trend lines; they're not so relevant anymore. And we'll be looking on this trend line for that. In that case, if we see something like this, that could be a breakout to the upside, in fact. All right, dollar Swissy. Let's see. Roy is asking about a slideshow. No, we always show the live charts, not the. We show images with the educational webinar, right? We prepare that beforehand, but with live webinars, we show the live charts. It's easier, it's up to date, stuff like that. If I understood your correction, if I understood the question, correctly, getting my words mixed up here, but dollar Swissy, I have it somewhere. All the way here. I'm not a big fan of the Swissy personally because it's really quite a rangy currency. It doesn't really move a lot not a lot of volatility on this one. But yeah, basically, indeed, if it is, there was a big pin bar there and a small inside candle, and now we're seeing the follow through of that. So ultimately, that looks like dollar weakness against the Swissy at least. And we'll have to depend on today's candle close. I mean, anyone trading this pin bar is doing well and up in profit. But anyone who is not in that trade, I think probably this candle close will give us some information. If it's this low, this close to the low, some retracement, but there could be a breakout down to the S1. It's asking, oh, you were asking about assets. Okay. I think, yeah, Nenet maybe shows something. I know what you mean. Nenet does have some slides, I think, with setups, right? On Mondays. Maybe that's what you mean. Yes, that's his particular style of trading. It's more pending order based. It's using a CAN-MACD system and very, very effective way. I personally like to use more market orders, so it's a bit different style. So that's why I'm looking at live charts. Yeah, that's the main reason. Let's see. So other than that, we have, I think, covered the most important currencies. We can take a quick look at some of these. Stock indices are making higher highs. Let me take a look at gold quickly. I'm trying to find gold here. 1 second. All right, yeah, as expected indeed. Finishing 5 waves down seems to be a wave A in my view. This is a wave B. So I'm expecting 3 waves up and then a turn, but I am waiting for price to confirm that kind of view. So I would like to see a 3 wave like this, and in that case, one more leg down before the big move up. So that's what I'm waiting for on gold. I think that this is a wave A of wave B, but let's see. All right, I'm anticipating an A, B, C. All right, that's about it, I guess. We have a question from Andre. We did take a look at these pairs already, but we can take a quick peek what happened in the meantime. And yes, pound is breaking indeed this little bull flag we talked about already just a few minutes ago, and that is breaking. So yes, looking for, I think, a small little push, but I wouldn't be trading that. I'll be looking for a turn on the 4-hour chart, and also keeping an eye on today's daily candle, because if it's really bullish close, this whole bearish analysis is unfortunately invalidated. And that happens sometimes. Sometimes I wait for trade setups to occur, long-term trade or swing trade setups, but don't get confirmed. And if I'm lucky, I didn't trade it. Sometimes, of course, I trade it and I have to either take a loss or manage the trade. In this case, I would probably be able to avoid taking any trade to the downside because I didn't get any confirmation. That's good from that perspective. For the pound New Zealand, yeah, as I said, looking for this daily candle really to close near the R2. A candle close near the high, I think, shows a good chance of a breakout of this resistance zone later this week, after maybe a small retracement of this daily candle or some bull flag on the hourly chart. So the pound dollar might not be the best one to trade upside, but I think the pound New Zealand could be interesting. The pound dollar is structurally, from a market structure point of view, still, I think, looking bearish. But if it does break through this 50 fib, then maybe one of the best pairs to trade it, this pound strength, would be against New Zealand. Of course, the New Zealand is currently weak, and that might change too. So we have to keep an eye on these crosses, and there could be a better pound pair later this week. These things are fluid, these things are flexible. Just because New Zealand was weak at the beginning of this week doesn't mean it has to end up like that. Actually, often not, there's a bit of a mixture in these roles throughout the week. So, from this perspective, be on guard. But for instance, odd New Zealand might shift, and it could be better to trade pound odd. But just keep an eye on all these crosses, and you keep an eye on these market structures, and you should be able to see which one is probably set up better of these crosses. All right. So definitely pound is even keeping an eye on the upside, whereas pound dollar is still keeping an eye on the downside, but it does depend on how price will close today and how price will respond to the 50 fib, and will it break the channel to the downside? Because if it doesn't, and it starts to break above the 50, or it has a strong daily candle, then even the pound dollar is not bearish anymore. So time will tell, but that's my plan at the moment, at least. So if you want to catch more webinars, feel free to do that in the morning as well. For instance, here, real-time daily trading ideas. There you go. Is one of those webinars with Jens, Nennet as well tomorrow, and myself looking at wave and chart patterns tomorrow, strategy webinar. And Thursday, Nennet and I take a look at naked candlestick trading. That's all within education, Forex and CFD webinars. But there are a lot of other tabs, good tabs too, courses, articles, analytics, plus of course how to get started with trading. So feel free to discover that. Thanks for joining. Sorry for the delay once again. I'm going to write a note, 4 p.m. Central European time for tomorrow. But thanks for hanging in there. And yeah, I can see that. Maybe that would be an interesting idea, actually, Roy. I'm not sure if Admiral Markets can actually register for you. I think you would have to do it yourself. But a reminder of the registration. Yes, I can see that indeed. I can imagine there's a lot of registration processes behind that because they're all kind of separate categories. I will reach out and see if there's any way to simplify that. Um, I don't know if the software allows that actually, but I'll float the balloon or throw up the balloon in the air and see if there's anything that can make it simpler. I can see that. Yeah, that's a lot indeed. It's a good idea to think about at least. I hope that there's some simpler way that the software allows. I'm not totally sure about that. Good feedback though. We'll let you know if I don't let you know, just feel free to remind me, but I'll try to get back to you on that one. So hope to see you in the webinar soon. Wish you all great trading and cheers.